Hey everyone, I'm Charting Man Dan, trader and technical analyst for the last 13 years. In this video, we're going to check in on the charts and the markets as the bulls try and get the daily bounce going. We also have Microsoft and Google earnings reactions after hours to check in on, and a lot of volatility in the crypto stocks. Let's get to the charts.
So we headed in today looking for the bulls to confirm hourly uptrends to get the daily bounces underway, and they sure took their sweet time this morning putting that together. And then we had a significant amount of weakness, and it looked like we were about to roll over into bear flags, which are still on the table as a possibility. But where did we bounce from? Look at our hourly supports. The hourly uptrend is our guide on the daily bounce. High of yesterday, higher low in the afternoon, higher high with zero follow through. Dropped all late morning, and we bounced right above hourly support. We held it by 50 cents. The 5-minute time frame was a waterfall drop, stair step drop, low 20 RSI, pretty extremely oversold, and we held hourly support and bounced into the end of the day. So what we've got is an hourly tightening range. If we fail the high of today tomorrow, I'm going to be viewing this as an hourly head and shoulders attempt to try and continue shaping up a daily bear flag. And we know the burden's on bulls to follow through over the 424s if this daily bounce is going to be a bear flag. So for me, burden of proof is on bulls to prove to us that this is not a daily bear flag. And as I mentioned, I'm now starting to scout bearish over the coming days, looking for this daily lower high to be set in a number of places. The NASDAQ had a bit more daily bounce follow through. We are watching this falling wedge that I keep talking about because we have a bear break with zero follow through again. So 2-day, 1-day, whatever you prefer, but here we are now pretty much smack dab back in the middle of this range. But a QQQ daily lower high is the most likely result of this bounce. We're going to watch our bounce retracement size, which right now is at 382. Same deal. Hourly support was 355.51. We held it by 28 cents. 5-minute waterfall drop, oversold, nice bounce into the afternoon, and now we got to see what our earnings reactions are doing. So again, if it's an hourly uptrend and the bull breaks lack follow through, it's a potential daily bear flag. We could also just use the EMA and say as long as the EMA 12 is resistant, it's a potential daily bear flag. So the earnings reactions we have going on right now, Google is bearish, and that is due to a cloud revenue miss. So we're trading at 132. Obviously, conference calls and things change things, but it's all about the weekly support for me of 127.22. But this is the rising wedge, breaking bear. We're keeping an eye on this recently. And so again, we're trading down around here. And so the question will be, do we lose the weekly uptrend? Bears need to break 127.22 for the weekly higher lows to be lost for the first time in a long time, since the fear lows. So that would stand out, and that would be shaping up a 3-month lower high for an equilibrium if the bears can follow through a bit. Microsoft earnings reaction was initially bullish, but not by much. We're giving some back, but we're trading at 343, which means the highest level we've seen in months, and this is a potential monthly bull flag coming off the all-time high, and so this is going to be our bellwether where there's a number of things that are still possibly monthly bull flags out there. And if Microsoft were to confirm a monthly bull flag, that would increase probabilities that other things will as well. If we fail the all-time high and then drop down and break 309, that's going to be a confirmed monthly downtrend. I might move up my swing trade stop to 309 or 300 psychological. I probably will. Again, remember, this is one of the longest swing trades I've held. Back here was my entry. Yeah, I've been holding that for 10 months. It's gone real well. But I think I'm going to walk up my stop because, again, if we fail the all-time high and break 309, that's definitely going to be a red flag for me. Tesla got a little bit of bounce follow through. Again, we know the daily lower high is the most likely scenario. There was relative strength on the morning, and then it significantly shifted. And there was a headline with California and autonomous cars. I'm not sure exactly when that came out, but it was a very distinct shift into that relative weakness. And so now the bears are going to try and confirm an hourly downtrend. So we go straight from an hourly uptrend to at risk of confirming an hourly downtrend which again would quickly set a daily lower high if that shapes up. NVDA, nice bull follow through. It had some relative weakness on the morning with the headline and then recovered into the end of the day. And so we're going to be watching, again, the 2-day equilibrium, just getting real tight. We're scouting the lower high compared to 476. The hourly uptrend is our guide. New hourly support, 427.12. And patiently watching for the lower high and the continued tightening range into November. Semiconductors, similar but weaker. Didn't break the high of yesterday. So just a daily inside bar. Healthcare, gap down open. So tried to participate in the broader market bounce today. And we have a double bottom at 126.88 now. But we still need the hourly uptrend to confirm. Low of the day, high of the bounce, higher low. It's just an hourly equilibrium. We have not confirmed an hourly uptrend in the healthcare sector since we rolled over from that rising wedge we were watching. So it's a hold of support initially, but burden still on bulls there. The financial sector double topped at the high of yesterday by half a penny. Same thing, haven't confirmed an hourly uptrend yet. It's resistance, support, double top, higher low. It's just an hourly equilibrium setting up to break tomorrow. Must break bull. Then we scout the daily lower high. So we haven't even started the daily bounces on XLF and XLV. So we could say SPY is positioned well if XLF and XLV follow through to participate in the bounce. And we could say SPY is going nowhere and it's a bear flag if these names fail to get the daily bounces going with confirmed hourly uptrends. So I will be watching these names closely again tomorrow, XLF and XLV. IWM, same deal. We barely got over the high of yesterday. It's a very weak bounce still at this point. We've got, we can bounce 5% and still form a daily lower high. So bulls aren't proving much there. We did see ARKK with a more significant bounce. Still a daily downtrend. But AI still got the swing position. It's looking really good. I've said this a number of times in the last week or two. The relative strength, just not breaking support as ARKK dumped to lower lows. And so here we are testing the daily lower highs and technically broke it by a penny, but bulls would love to get back over 27.50, which would essentially affirm this base of support and set the monthly high or low. And this relative strength is coming from yesterday, double bottom at the lows. And if we were to pull back from here, we'll be watching for the possibility of an inverse head and shoulders. But again, AI clearly has relative strength compared to other growth names. Crypto stocks with a ton of volatility. So the bulls controlled the morning, and you look at the ugly candles, absolutely. And you say, well, they haven't done much, but keep in mind that from the low of yesterday, MARA went up 35% in 2 trading days. So keeping that in mind, but definitely a lot of profit taking today and some opportunity for the bears. And, I didn't trade a lot this morning, but once that volatility started kicking in, we had a Bitcoin bearish headline. And once we dropped here, was playing the bounce, then played the 15-minute lower high on Riot, posted some of those trades on Twitter, but just back in scalp trading mode where, locking in 1% and pulling back. And I ended up with like 4 trades in 15 minutes to give me a day maker. I don't know where that. Nope, that ain't it. Anyways, it's on Twitter somewhere. But MARA has more dilution news, second time in 2 or 3 months. So it's going to remain relatively weaker if it keeps increasing its share count. And so here we are looking at the potential of a gap down open and comparing it to Riot. Not a huge difference, but clearly weaker. And Coin, bull break today, but again, a lot of profit taking there. And we're going to look for an hourly lower high to be the result of the next bounce into tomorrow because of the size of this retracement. So again, as a day trader with no bias on these names, love it. Give me that volatility. I mean, Coin from the low of the day to the high went up almost 10% and then dropped almost 10%. That's beautiful opportunity in both directions. And again, you're not needing to nail those moves. You're just getting the meat in the middle. I mean, if you get 3 to 4% on the move up and 3 to 4% on the move down, you have a huge day. The dollar had a daily bear break with zero follow through. We went straight into an extremely strong bounce. This is a potential bull flag shaping up a weekly bull flag. So again, my statement is if weekly EMA 12 is support, it's a weekly bull flag. And it's a bear break with zero follow through. So trying to be a falling wedge is what I meant to say. So this would be the falling wedge attempt. Metals trying to stay healthy as well. Gold ignored the dollar strength today and had first hourly oversold conditions lead to a nice bounce. But gold has a downtrend resistance line on the hourly rejecting the price. And we would have to see the bulls shape up a 4-hour falling wedge for a daily bull flag. So there are two different things. The dollar is trying to shape up a falling wedge for a weekly bull flag, and gold is trying to shape up a falling wedge for a daily bull flag. One thing we could say is gold held on really well today considering the dollar's strength. There are no red flags on the daily time frame at this point. And we look at silver, it's trying to hold EMA 12. It has not been quite as strong. But again, I'm watching for an inverse head and shoulders type of setup on silver and on the miners to try and take shape into November. But I definitely want to see the dollar continue to weaken here because the metals can ignore the dollar, but only for so long, in my opinion. Oil following through in a big way from the rising wedge, so the 4-hour rising wedge. And again, this pattern has just been beautiful over the last 6 weeks. We had Microsoft and Meta give us 4-hour rising wedges for weekly lower highs a month ago. Then we had XLF and XLV give us 4-hour rising wedges for weekly lower highs last week. Now we have oil giving us a 4-hour rising wedge, setting the weekly lower high, and we're looking down at 80.20 to see if the bears can confirm a weekly downtrend. The energy sector is dumping hard in response to this, in response to rejecting from this resistance zone. And Lori jumped on that short yesterday and more aggressively is getting follow through. I'm looking more longer term swing trade mindset, and I'm waiting for a daily bounce at this point, but already a very quick 5% pullback over the last 3 days. And it's shaping up. I mean, it's shaping up the possibility that the energy sector is a monthly rising wedge and that oil is potentially shaping up a weekly downtrend. So inventory report tomorrow in oil is going to be meaningful, but go to the energy sector 2-day time frame, and I'm watching for a higher low and then a lower high. Got another one. Guess what? CCJ, weekly. What's the most likely scenario? Well, I'm watching for a weekly lower high. We had a pretty significant retracement. We pulled back 15% plus. There is space for a weekly lower high. What is shaping up on the 4-hour? This is my new favorite pattern. This is a potential 4-hour rising wedge scouting a weekly lower high. If this breaks bear with a confirmed hourly downtrend tomorrow, that's what the bears want to see here. Confirmed hourly downtrend, and that will be the first step towards this confirming. The only downside is that we've got earnings a week from today. Doesn't give a whole lot of time for this pattern to play out, but definitely still watching for it. And again, this is technical analysis and multiple time frame analysis 101. You find the most likely scenario on a longer term time frame, you zoom in and you find a bullish or bearish pattern that either confirms or denies that longer term most likely scenario. And it's just been beautiful on the 4-hour and the weekly. And this is the first time in my 13 years of trading I've been using the 4-hour time frame for weekly lower highs in stocks. I don't know if it's just this market environment or if this has always been a thing that's worked well, but I am paying attention to it way more than I ever have. Natural gas daily bounce underway. We confirmed the 4-hour trend change. We gave back a lot, but nice recovery by the bulls. Again, have to follow through here. The last thing you want to see is the bull breaks with no follow through, shaping up a rising wedge. We know a daily lower high is the most likely scenario, so it is worth keeping an eye on that possible rising wedge, but bulls definitely got the win today, finally getting this daily bounce underway. So, heading into tomorrow, keeping an eye out for daily lower highs. The burden is on bulls to negate daily bear flags. We're watching these earnings and conference calls reactions. Microsoft recovering a bit. Google still weak, testing the lows. NASDAQ pulling back because of that a bit. But again, hourly tightening range. So, viewing it as high of yesterday, low of consolidation, bull break, but you could call it a double top. I mean, we broke resistance. NASDAQ broke a little bit more convincingly, still less than $1, but SPY hardly broke. Held support, so I'm viewing this as a tightening range. And we'll see how it breaks into tomorrow. Appreciate you watching. Do good things.
There's a whole bunch of some kind of flies. There you go. That's all over the yard right now. That's pretty cool.